What's up, everyone? Welcome to the Moving to Florida show. We are going to be joined today by Yahya, who is our co-host now, a full-time co-host now. Unfortunately, we don't have Judson in today. Judson is out with some buyers, so this week it's just me and Yahya. And we're going to be talking about 55 and up neighborhoods and senior citizens. And we're going to be talking about all the different mortgages seniors have or can get. And not only that, we're going to be diving into a little bit of what 55 and up is. What is those 55 and up neighborhoods and why are they so popular here in Florida? I mean, we're kind of the retirement community, aren't we? Yeah.
I mean, yeah,
dude. It's a retirement state, Florida, retirement state.
Well, I mean, man, listen, I'm thinking I want to retire too right now.
I mean, if you can retire before you age 40, that is fantastic.
That is pretty awesome.
That means you did something right, or you inherited a lot of money.
No, but you know what you said about Florida, man, that is absolutely true. It's I think I mentioned this before, but the first time I moved to Florida, I hadn't even moved here. I was here for a couple of months vacationing, a couple of months. Weeks turns into months. And all I used to do was wake up, man, go fishing, go diving, go to the beach, and months of that. And I'm like, man, I could get used to this kind of living.
And then you moved back to Missouri.
No. Well, I'm not from Missouri. I'm in Missouri right now, thankfully, for only the next 3 weeks, and I'm back to Florida.
You're back to Florida for good?
Oh, man. Oh, yeah. I'm excited, dude. This was a great appreciation time for me. You know, it's kind of like when you don't have what you really value, maybe.
Right.
You don't really feel it.
Right.
I'm like, yeah, you know, I kind of really miss the tacos.
Right.
You know what I mean? Like, I miss the beaches.
Exactly.
But
I miss the
going
fishing.
back to dude, fishing, absolutely. But you brought up a really cool point, and I think a lot of our audience, thank you guys very much for reaching out.
Yeah.
And asking us to, share something. This is why we do this. We love hearing back, and we want to give you content that you guys want to hear about.
Right.
So today, as Mohit said, we're going to dive into the 55 and up community.
Yep.
And I don't have much data on this, Mohit, so I'm probably going to, start it off, and I'm going to pass it over to you because I think you're the actual expert here. But Florida has been a popular destination for retirees, right?
It is a very popular destination for retirees. Not because, a lot of the retirees want to get away from the cold. They want to get away from the snow. They want to get away from the nonsense of the hustle and bustle of living in major cities like New York City and Chicago. I guess that's where most of our retirees come from, is from the major cities. They've lived in the major cities. They've worked in major cities. And they want to just come down to Florida and just stay by the beach or near a golf course and things like that. So that's why Florida is such a popular destination, because we have these 55 and up communities. And these 55 and up communities, they usually consist of golf courses, swimming pools, fitness centers, clubhouses, organized social events and things like that. So there's a sense of community within that 55 and up community, that up neighborhood. So that's I'm saying the word twice.
I think, guys, what happened actually, Mohit is having his thoughts about retiring right now.
I am.
And,
I'm thinking,
he wants to move into one. He said golf courses, fitness places, and social events. I want to be there right now.
Exactly. Yeah, it would be nice. It would be nice. I mean, not saying anything because I do want to retire. I see how my parents are living right now. They both just moved in this year in a 55 and up neighborhood. Well, actually, sorry, October of last year. So it's been less than a year, and they moved in there, and they love it. They love the social aspect that they meet all their neighbors that are around their same age, and they, take their diabetes medicines at the same time as. Not kidding. But you know what I mean. They have a sense of community within that area. So, and plus they have so much to do in there. They have I think every week my mom goes and plays bingo with these older ladies and older gentlemen, and they bring their own bottles of wine. They get down though. I mean, they have their parties and stuff like that. They know how to party it up. But again, it's basically for people that want to come here and have a no maintenance style living. So they don't want to worry about mowing their lawn.
That's what I was gonna say, man. Like, it's really cool you mentioned that because I mean, if you think about it, I mean, Florida gets rain almost the entire year,
Yeah,
and
exactly.
grass is growing, and you have all this stuff, and when you think about it, you're like, man, I'm thinking Florida, I'm thinking a nice tropical place, but yeah, it's gonna be sunny, it's gonna be muddy, it's gonna be all that.
Right.
But these places take that out. It's
Yeah,
kind of like
yeah.
one of those high end HOA communities for most townhouses.
They are paying some high end
They-
money for those communities.
Yeah.
So, yeah.
So it's pretty awesome that, like you mentioned, I mean, if it's kind of like Avalon Park in Orlando.
Yeah.
People don't leave that place. It's like its own little city.
town, only like even Celebration. But these are towns. But these towns actually are. You drive through them and whatnot. You're not allowed to be in them. They are gated neighborhoods. All these
That's the
55
thing.
and
It's
up
like-
neighborhoods are mostly gated. I don't think I've seen a 55 and up neighborhood that is not gated. So my parents, again, I'm going to use them as an example because I just put them in there. We bought a house in there for them. So I mean, yeah, I'm going to talk about that because their community is fully gated, but they have another community right next door, which is also Highland Park, same name, but it's not gated. The roads are not private. They're public roads, public sewers. Now, if you come into the gated side, the roads automatically become private roads.
Oh, wow.
Yeah. And the sewer system is private, too. So all that's why your HOA, let's say an average HOA here in Florida is, I would say, what, $55, $60, maybe $100.
Really? That's it?
Maybe $100. That's the average. I mean, there are some that are higher, some that are lower. I would say.
I mean, I've been seeing some recent ones, man. Like those are up there. Like
Yeah.
they start at like 250, 300, but
Yeah.
again, like you mentioned, like you said this earlier that they do cover a lot of amenities.
Right.
Some of them replace your roof. So, it and for a lot of people
the
that
55 and up, you can see it
Yeah.
as high as like $300, $400, $500. I've seen it
Wow.
as high as like $600, $700.
So,
dude.
so Mohit, bro. So, I mean, if it's like $600 I'm paying, or not me, but
Right.
anybody who's paying it,
Right.
what does this usually entail? So we talked about, the facilities and all that,
Right.
but is there anything else? Because I mean, $600 is kind of steep, man, for
Sometimes
HOA fees.
some of the communities will pay with your HOA is internet's covered.
Oh, wow.
Your water may be covered.
Oh, that's pretty cool.
Yeah, your let's see here, maybe your cable is covered.
So, dude, so essentially what you're saying is they don't even have to worry about paying bills.
Yeah, no, because you are paying such a high
Most of them.
HOA that
That's pretty cool.
You can see that the HOA is taking care of paying those companies. Now, here's the caveat to that: you're not allowed to change the company. Say if the HOA community uses 1-2-3 lawnmowers, lawn mowing company, landscaping company. You can't deviate from that. You can't say, "Hey, I don't want these guys to cut my lawn. I want Yahya to come cut my lawn." No, it doesn't work that way. You have to use the same company that the HOA is using.
But I mean, honestly, I don't see any harm in that. I think that's
It
really
really
nice,
isn't
man.
a
I
harm
mean,
in that.
Yeah, no, I think that's such a great thing. And the thing is, before I was in Florida, I never knew these things existed. These communities, I didn't know about them. And you know what? You were telling me about them the other day. You actually had a couple of names. You talked about the Villages being one.
Yeah. Villages is actually a city on its own. They are governed by themselves. Like, how Disney's going through that whole nonsense with DeSantis of Reedy Creek?
Oh, no, I don't know about it.
So, Disney was basically running their own their area that they own on their own. They don't need permission from Florida to do certain infrastructure changes. If they want to use one of their characters for marketing purposes in that area, they don't need permission from Florida to do so.
Oh, wow.
Yeah, Disney basically was governing themselves. And, DeSantis is like, no, we don't want you to govern yourselves anymore. So
Wow.
so there was
that's
a beef
insane.
between them. We're not going to dive into that beef too
Of
much
course.
yet, but the Villages is set up the same way. They have their own governing system. So they have their own
So-
fire department. They have their own police
Wow.
department. They have their own, but they pay for it. Obviously, they pay for. They have their own electric company, their own internet company. For your basic necessities, that town owns it.
So it's funny you brought that up because I was reading somewhere that they have more than 3,000 social clubs
Yeah.
within the Villages.
Yeah.
And that blew my mind. I was like, dude, I've been there one time. So one long time ago when I used to sell cars, I had to deliver cars to people as a courtesy. I went to this place. I'm like, where is this place, man? It's like in the middle of nowhere. But when you go in there, these huge gates open, and all I see is golf carts.
Yeah.
Literally millions of.
I don't think they drive cars in there. They just drive golf carts everywhere.
Yeah, no,
it's so much
you
more
can
cheaper.
see that. And the first place we got to, there was like this big, huge clubhouse, and it was 3:00 in the afternoon on a Tuesday.
Right.
And everybody was drunk. And I was like, what the? I was like, what is this place? Like, what, am I still in freaking the United States, man? What's happening here? 3:00 in the afternoon, people are drunk.
You
it's
talk
like, wow.
about being retired. That's being retired, bro. You can wake up in the morning instead of brushing your teeth. I want to have a glass of vodka.
Damn, it's like.
Instead of cleaning my dentures off, I'm gonna have. I'm kidding.
Yeah,
I'm kidding.
That's pretty sick. It's but I mean, listen, if anybody likes doing that or has thought about doing it,
I'm ready to do it now. I'm ready to retire
for sure,
now,
man.
bro. But the way they live it's very carefree living in the sense of like you're not responsible for cutting your lawn, keeping your outsides clean, keeping the community clean. The HOA takes care of all that for you. All you have to do is enjoy the amenities. Go to the pool, go to these functions, go to all the. Some of them, to each their own. There are some 55 and up nudist colonies too down here too. So you just kind of have to if you're into that. I mean, reach out to one of us and me or Jetson, and we can definitely find those spots for you if you're into that. But I mean, yeah, they have it. You name it, they have it. But again, it is only for 55 and up. Now,
I mean, that's pretty
heard
cool.
Something I don't know how true this is, but I'm just going to put it out there. When I was buying it for my parents, they said, I believe they said 10% of the community can be under 55.
Really?
Yeah. So 90% of the community is over 55, but 10% can be under 55. So I'm guessing that's probably, the husband's 60, 65 years old and the wife is, 30, 35 years old.
So is that dependent on a certain community or that's across the board?
That's what I heard from the sales agent. That it's supposed to be that way, but I'll look it up and get you the. That's
very interesting.
Number.
Yeah, I was going to say that's my expertise, looking guidlines.
Yeah,
so looking up guidelines
and
is what I do
reading
all day.
600-page books on guidelines.
Hey, it's funny. It's I was talking about this with somebody else the other day, and I'll quickly shoot on it because I think it's really cool you brought this up. A lot of people say when you us being in the industry, right? What gets you going? Like, why are you so passionate? Like, what's wrong with you? Why are you reading 600 freaking pages? But when you think about it, it's like, okay, these 600 pages are going to give me the ability to maybe serve 600,000 more people. But the way I'll serve them, I'm going to really give it everything I've got. You know what I mean? I'm going to know everything because now we're in servicing industries. That's what we're doing, right? Like we're providing value and we want to make sure all our audience know everything that we do and how we do it and the information we provide them. It's helpful. And I'm really happy, man, that since, I've been on the show, I've been able to enjoy an episode where we actually are doing something as a request for the audience. So it's a pretty big deal.
Yeah.
Yeah, it's awesome.
All right. So I did look it up. And I got the answer.
Oh, you did?
So
okay.
At least
wow, that's fast.
80% of the occupied units are occupied by at least one person 55 years of age or older. There you go. 80%. So and 90% was wrong. It's 80%. The facilities are
close.
And this is all, I would say, fairly new information because this was implemented in 1995. So, what is it? Almost 30 years ago? 95, 2005, 2015, 2025. Yeah, in 2025 it'll be 30 years. So it's a fairly new rules and regulations. Let me see here what other information there has. The facilities or facility or community publishes and adheres to policies and procedures that demonstrate its intent to, in fact, be a provider of housing for older persons. The facility or community complies with rules established by the U.S. Department of Housing and Urban Development (HUD) for verification of occupancy. So that's how they verify.
That's pretty dope, man.
Now, speaking of HUD and speaking of mortgages too, Are older people allowed to get mortgages?
Why not?
Tell me why. Why are they allowed? I mean, they're 55 and up. They should have, all this cash saved up.
So, I mean, the thing about a mortgage is it's basically just risk.
Yeah.
And the thing is, believe it or not, the older you are, the lower credit risk you are. The younger you are, the higher credit risk
Why?
you are, because you don't have enough. So, as a lender, what am I doing? I'm really just looking at somebody's personal financial plan,
Correct.
right? Their personal financial fitness, and how long have they had credit,
Right.
how have they used it, and how much they use at a time, how often they make payments at a time, how many inquiries have they had, to kind of analyze how risky they would be as a borrower. Now, of course, these things are calculated based on an algorithm, but for me, what I'm looking at is I'm looking at least 24 months behind or 36 months behind, because I want to see in the most recent years, what has the borrower done, right? Now, a lot of times we have people that, let's say, they have credit for 30 years.
Right.
Now, if they had a couple of bankruptcies or some major life events, since that time, what have they done to fix that?
Okay.
And it's really cool to see that when you see certain reports, people have really changed their lives. Like, they worked really hard, and you have a huge amount of respect. You're like, wow, man, like, you went through some really tough times, but how did you do this? That's a cool experience.
Right.
But getting back to this, the older, people are, the more credit they've used, the more time they've had, the more experience they've had. They have lower debts. And a lot of times people have lower risk appetites, and their spending kind of goes different. When you're younger, you have a lot more expenses. But as you get older, I think for most people, expenses kind of cut down a little. So they're less risky. And they have pretty much a lot of money. I think they're the only ones who have money right now to actually do something. There was a meme the other day. I think this is going to make people laugh, but there was this guy saying that, man, all these people walking around saying they bought a house in the 1950s when it was worth a raspberry, and now they're millionaires, and I'm living here in a dorm room with 30 people.
Inflation, their house is technically worth a lot more than you think.
But so it's really cool, and I'm glad you touched on that, because there's a really cool product that I think a lot of people are misinformed about, and it's called a reverse mortgage.
Yeah. Tell me about that.
And I'm sure you've heard
because
of it.
I feel like when you hear a reverse mortgage, I'm gonna let you dive in a little bit.
Sure.
But when you hear about reverse mortgages, everyone just shies away from it because it's such a bad word, or people think it's such a bad word as doing reverse mortgages, because they feel like the bank is going to take my house away from me if something happens. And that's going to be one way or the other. Regardless, if you stop paying your mortgage payment, you're going to be foreclosed on, and vice versa. If reverse mortgages, if they don't pay you, you get to take the home back from them.
So it's very interesting you said it, because yeah, you're right. A lot of people have bad
bad taste in their mouth from it, I guess.
And they're not wrong. They're right to have that, because what's interesting, man, is, like you mentioned, this recent law or the regulation for 55 and up community for 20%, 80% rule.
Right.
The same thing goes with mortgages, man. People learn. And, 2008 was not just a crisis for what it was. There was a lot of things that it brought up to the light.
Right.
And one of the main things was predatory lending. Lenders were, taking advantage of borrowers, and they did not have this rule that was called the ability to pay, where we as, licensed loan officers are not just here to give people money and say, okay, yeah, here you go, even if you can't afford it. It's to give them a fair decision and choice where, okay, if this person is able to make this payment consistently without, going broke or becoming mortgage poor, I have to inform them, let them know so they can make a decision. But something similar happened for the reverse mortgage industry. What happened was FHA went back and updated their guidelines.
Right.
And there were some, I think, guidelines within there that did not really do a very good job of protecting borrowers in the past.
Okay.
But very recent, last, I think, 5 or 10 years, FHA actually stepped in and changed the rules completely.
Oh, nice.
And I've done a couple of these recently. And, I had the pleasure of dealing with some really awesome people and learned more about this product to actually work with them. And it's not all that bad. Basically, it just allows, older homeowners to access the equity in their home without actually selling the home.
Right.
And the one specific thing for this is you have to be at least 62 years old.
Okay.
And if you're younger, you can't do it. So you have to be at that age. Plus, you can receive a portion of the equity. So in most cases, to give you an easy example, in one of my recent transactions, this home was roughly like $450,000,
Right.
and they wanted whatever they can get, and it was cash owned.
Okay.
So the home was cash
It was
owned,
free and clear.
free and clear, exactly. So they didn't have a mortgage, and they got up to about 65% of the value,
Okay.
or 55%. 55% of the value, and it's like an open line of credit,
Okay.
and you get charged interest just like a home equity loan
Right.
that normally you get, right? And it's kind of like that, but better, because what happens here is your home is still appreciating in value. FHA has an insurance that they include in there.
Right.
So if some crazy thing happens, your property's insured. You're never going to owe more than your loan balance.
Right.
In the past, that was not the case. People actually owed more, which caused that problem where they're like, oh no, we don't want to lose our home.
Right.
In this case, because FHA is insuring this,
Okay.
you're fine. And so now you can use it for a lot of reasons. And the benefit of this, I see mainly is, when something happens in life as you get older, right? You have limited sources of income. Not everybody has planned their retirement.
Right.
But this gives you a really good chance to understand home ownership.
Right.
Because look, if somebody bought a home, like I'll use these people as an example, and then I'll get into some really quick benefits here. So case in point, these folks, awesome people in their 70s, living a retirement lifestyle, enjoying life, like you said, but not living in a 55 and up community. I believe they have a townhouse, and it's a really nice community, but they love going out and they love eating, and they don't look at their bill. So now what's happening? They have credit card bills racked up, and every month they're spending $700 in recurring payments to credit card bills without realizing what they're doing to their finances, right? Because now credit card bills have 27, 29, 28% interest that they're paying. So it's $700 you're spending here. Now, apart from that, obviously other expenses, groceries, whatever, all these things. So they are now in trouble because they want to buy a car. They want some freed up cash, but now all their retirement income is going to pay their bills, and that's all they're doing. They're not really able to do anything. So we sit down and we plan it out, and they're like, well, we made a mistake. We didn't think about it. We're still going to enjoy it, but now we have to just keep an eye out on things. But I wish we had a chance to, fix this where we're not, paying everything away and left broke every day.
Right.
And we're like, well, do you guys own your home and this and that? And found out that we can do a reverse mortgage. And the benefit they got, so they wanted to buy a car, and they also wanted to have some freed up cash to do some retirement planning for long-term care, which they could do. And they wanted some money to invest in some annuities just, for the fun of it. Because might as well invest for our grandkids and stuff. So doing the reverse mortgage gave them ability to withdraw up to almost $200,000
Right.
at any point in time. They will not have to make a payment ever again on it. And if they put any money back in there, then their balance basically goes down. They pay less interest, but the interest gets accrued, so they don't have to pay it. Now, the even cooler part is, as their property appreciates, that credit line increases with that.
Okay.
So if your home went from 450 to 500, now based on that, whatever your percentage was, it grows into that.
Okay.
So they got another shot in, fixing their finances, paid off all their bills, got a car cash without having to get a payment on there,
Right.
replaced it, and now they're living life and they have no credit card bills.
There you go.
That's pretty
That
sweet.
is sweet. That is very sweet. Now, as far as what you said, does the home need to be completely paid off to get the reverse mortgage?
Oh, no, you can have a mortgage on
Okay.
it.
All right.
And you want to hear something even crazier? You could buy a home using a reverse mortgage.
Okay.
You can structure
Please
the loan. So this was something interesting. So I had a podiatrist who was looking to buy his home, and we were thinking about what do we do? And he had all cash,
Right.
a lot of cash. And I was like, man, I want to be this guy, but like literally just
Right.
cash. I was looking at his bank statement. I'm like, man,
This is all cash.
that was so beautiful.
Right.
I was like, wow, look at those numbers.
Sir, can you adopt me?
I was like, but the thing that scared me was you have all this cash that is literally degrading as the economy is, moving.
Right. You're not.
And I
You're
feel
not
so
bringing
bad.
value to your cash. That's
Yeah,
what
and
you're
I'm like,
bringing.
I need to help this person, man. Like they've saved all this money all their life. This is not cool.
Right.
I can't stand there. And we were figuring things out. I'm like, why don't? So I called my team and I find out you can actually do a reverse mortgage, buy a home. You have to put a substantial amount of money down.
Okay. What is the
But then-
substantial amount? Is there a certain percentage?
Like
minimum?
50% or
Okay.
60% or
Okay.
something like that.
Okay.
But in this case, what they were able to do for him was they were able to give him, that equity in the house.
Right.
He buys it. It's insured now. That's going up in value.
Right.
Whatever leftover cash he has, he can use that to invest in something else and keep himself financially secure. So his money is just not sitting in cash.
Okay.
And that was pretty cool. And I was like, wow, this is amazing. And every day, man, I'm telling you, when you find out that you can make somebody's life easy and fix that by providing a really cool solution, I'm telling you, it's like, wow, I love what I do, man. It's fun.
So going back to seniors getting loans and whatnot.
Yes.
Now, is this would it be the same thing, like 30-year and 15-year conforming?
Yes. So it is. Yeah. It is exactly. Yeah. It's kind of written as a 30-year mortgage and all that,
Right.
but because you essentially have to follow the regular guidelines.
Correct. Okay.
So yeah, most of the things are pretty similar.
Right.
Not really much difference. It's just the loan amount is a lot smaller,
Right.
and it's more like a draw and not really anything else.
In the state of Florida, do they get any kind of benefits or any kind of I don't want to say subsidies, but like hometown heroes, like any kind of credits from? Are they qualified to get any kind of credits from the government?
We'll be back after a quick break.
Hi, I'm Leah, host of the award-winning travel podcast, Places I Remember with Leah Lane. I'm a longtime travel writer and author of the award-winning travel book, Places I Remember, Tales, Truths, Delights from 100 Countries. On our Places I Remember podcast, we share travel conversations with passionate travelers, well-traveled celebrities, and travel experts. You'll enjoy travel info about fascinating destinations and memorable experiences around the world. And we hope to inspire you to make your own travel memories. Follow us wherever you get podcasts. That's Places I Remember with Leah Lane.
So, I mean, the thing is, hometown heroes, so down payment assistance programs are
DPAs,
different, obviously. But, I mean, there's no age restriction on those.
Okay.
So if you are 62 and above and you do want to have a down payment assistance program, you're
so there's
able to get
no age, I'll say ageism on it.
Well,
there's no discrimination on age on that, obviously. It's against the Fair Housing Act.
Exactly. That's what I was going to say. Like, there's actually a law about this.
It's against the Fair Housing Act, yeah.
But it's funny you brought up Florida housing and hometown heroes. So I think we talked about this when I was first invited to this show.
Yeah, that was our first episode.
That was our
Heroes
first episode, man. Yeah.
We're reverting back to it.
Exactly. And the reason why we're reverting back to it is, guys, the governor of Florida, DeSantis, has added an additional $100 million to this program. And
Where'd it come from?
It's a really cool program.
Where's the $100 million come from?
I mean, from what I've seen, Florida has been in surplus for the past couple of months, man. Like, it's
our tax money.
But it's pretty cool though. Like, it makes you feel cool. It's like, yeah, man, I'm not in a broke state.
Right. It's one of the very few states that are not broke right now.
And I got beaches. I'm good. You know what I mean?
And we got theme park. You name it, we got it down here. Come on down.
I'm telling you, man. It's a really yep. Anybody who lives in Florida, guys, awesome place. I'm super grateful that I actually got to be in the state and got to experience it and meet some amazing people.
Yeah, like me.
But yeah, and well, I mean, it's I got to say, yeah, man, that is a true statement. And the thing with hometown heroes, I'm glad you talked about this, man, because I think a lot of people today don't really understand how down payment assistance programs work. Most of them,
please explain.
And nobody explains
in a
it. So
nutshell.
I'm just gonna, yeah, exactly. I'm just gonna briefly go over it, not to bore anybody, but the name spells it down payment assistance. So anybody who needs the assistance is able to get it.
Right.
But a lot of the times people think, oh, it's free money. It's not free money. There are different programs. Some are forgivable after a certain amount of time, and some are non-forgivable, and some have interest rate payments on them, additional to your other mortgage, your first mortgage, and some have 0%. And this is actually a very interesting hybrid program. So you have to pay this money back, Hometown Heroes, but it's at a 0% interest up to $25,000,
Right.
or 5% of the loan amount. Now, the cool thing with this is it has FHA, it has conventional, and it has VA. And it's super cool because typically as a veteran, you do have a VA loan.
Right.
And you can stack this with that. So you could do a VA loan and you can get Hometown Heroes And you can use that money to apply to your closing costs, your anything else that you need to. Of course,
You can't
on
just
these
give me
programs,
cash for it. I mean, I don't have any closing costs. It's VA loan. It's 100% loan. I mean,
so a veteran can apply the proceeds to their personal debts.
like, let's say I have to pay this credit card off.
Yeah.
So at closing though, it can't happen after closing. You can't just give me the money.
No, you can't. Yeah, it's not one of those shady transactions where it's like, hey, everything has to be documented, guys. No, so one thing about our industry is we're federally regulated, and everything has to be sourced and tracked. And if you had money in a mattress and you brought it up, unfortunately, it's not going to work.
Just put it in the bank for 60 days and let it mature. I'm kidding.
Even then, the thing is, but that's a very important thing you brought up. If a lot of times people, pass these things around, but please be sure that whenever you are making any, financial decisions, speak to people who work in those industries and are experts to properly guide you, because you do not want to do anything for the purposes of, innocence, and then committing a crime unknowingly. It's still a crime. And, I wouldn't want anyone
any
to
kind
do
of
anything
fraud that you do with mortgage, it's a federal offense.
Exactly. And the thing is, sometimes you may not even realize you're committing fraud, and you may be doing it with this pure intention of saving yourself some convenience.
Right.
And it may turn around against you. So please, when it comes to these things, just talk to somebody. But back to the Hometown Heroes, the reason I said it's really cool, man, is you can more than 50 occupations qualify for this. Yep. And the interesting thing about the 0% is, if you are buying a $500,000 house and you're getting $25,000 for it, and you're a veteran, so let's say you're buying this house, you have to put no money down anyway. Right. And now all your closing costs are paid. And the other cool thing about this program is the interest rate is subsidized and it's fixed. Right. So we don't have any control over it.
Okay.
And it's on the Florida Housing's website. Every time it updates, they upload it there. It's available for the general public to see, so it's not like a hidden thing.
Right.
And all these guidelines are all over the place. But in any case, you have to pay it back, obviously, after 30 years, or when you sell the home or you finance the home or you do something with it that, changes the metrics of your contract. But it's a really good program, guys. It's still out there, and a lot of people qualify. And especially right now where, everybody's looking for homes and inventory, Mohit, right, is kind of short again, which is quite shocking, because the media has been like, that person that's on the street, it's saying apocalypse now. They've been doing this since 2012 and telling the world, just like that person, hey, the market's going to crash. 2011, they started saying this. Man, guys, we're 12, 11 years ahead.
And we still haven't crashed.
Someday it will, man. Like, apocalypse are going to happen. But you can't be wrong 12, 13 years in a row and still have precedence. But
especially
when we talk about numbers,
the guy who did Rich Dad Poor Dad, who wrote that, he's been saying it for the last 10 years. The market's going to crash.
he's a I respect
guy.
him. He has some really
smart guy.
But you know what's funny about this, though? A lot of times, which is a kind of a, to me, I don't understand the mentality behind this. But I did speak to a few influencers, and some people, they say that they control the narrative in the market. So a lot of times these people, if I'm one of these big influencers and I want to buy a bunch of properties and I tell everybody, don't buy them, the market's going to crash. I scare the life out of people and they spread the word and the market slows down. I go in, buy this thing, rent it back out to these people that I lied to, and I make a bunch of money. So a lot of times, there's morality issues in the world, of course, and, people do that. But I would say, please just look at data, because Mohit, you've seen the Core Logic report that came out, right? Recently. And recently we're looking at them. I think housing prices went up by 0.9% just last month.
It's not
and
a
before
lot,
that it was
it's still
0.8.
significant in the sense of it's still going up.
So, but the reason why you're saying that is because if you remember from last year, when prices peaked in June till now, home prices have only dropped a collective of 3%.
That's it.
So it dropped 3%, and now it's going back, almost 1% every other month. So last month 0.9, before that 0.8, before that 0.2. So I mean, we're almost back to that price, and interest rates are still high because of the market, right? But there's still crazy activity. So I'm just saying that, this is a really cool thing they're doing to kind of assist home buyers, that they have a chance to actually go in and have a rate defined by the state to kind of help them, plus have all this money to use towards closing costs and pay for
Right.
things. So I mean, I'm really happy they did this.
Absolutely, absolutely. Anything else you want to add?
To the Hometown Heroes program? Yeah, I would say if anyone, if you're looking to buy a home, it doesn't hurt to just look up programs,
Agreed.
Down payment programs, because
I agree.
what's that?
Yeah.
Yeah, because the thing is, look, it's sometimes you may not even know you qualify, and that conversation may turn you into a home buyer. And if you've been renting for years and you just don't know how to start, this is the perfect way. Just research these, and you can call me, you can call any of the loan officer, anybody you know, like and trust, and just ask questions like, hey, how does this work, and how would this apply to me? And if you feel you're having a good conversation, that's all you need, nothing more. But I was going to share
What's
something
up?
with you, man, because I think recently people have been asking a lot of questions about the market and how things are and what is our outlook and are things going to get better? Are things going to get worse? What is the Fed doing?
Yeah. Tell me.
And I think most people, I'm going to simplify this as much as I can because this is a lot of boring stuff, but I want to make it fun. But the Fed's ignorance, their ignorance has actually led inflation to where it is now. And now they're going to make another mistake without seeing what they're actually doing wrong. And when we calculate the details here, they gave $5.2 trillion in stimulus, and they have kept the rates, their interest rates at zero for way too long. Plus, when inflation actually started to, run a little wild, they said it's transitory, which was clearly a huge mistake now if we see back. And when they finally realized this, they jacked up the interest rates by almost 5%. And now they are actually causing problems for banking. And it's crazy to think that they completely don't agree with that. The New York Fed, John Williams, came out and he said that the Fed is not responsible for any of the banking issues like Signature Bank or Silicon Valley. And dude, that's crazy to say, you know what I mean? Because look, not only did they let inflation run hot and they took the interest rates up at a crazy pace, now, even though that was a reactionary, way to handle it, as a result, guess what happened? Depositors now have a different alternative to put their money. Like, why would I put my money in a bank where it's going to get worthless?
Exactly.
I'm in an inflationary economy. Exactly, man. Like you can, easily go and get a 5% return or more probably in a money market account or short-term
Probably have a
treasury.
better
So
chance going gambling.
yeah, I think I'm always against that. I'm like, yeah, it's unfortunately the logic, the math behind it.
No, I'm just kidding. I'm kidding.
I'll get kicked out of there, man. I'll be counting cards and they'll beat me up and I'll have no fingers left, pull my fingernails.
No,
the old mafia way they do
there
stuff.
There are so many
But,
other avenues, especially in real estate, that you can make more than 5-6% cash on cash value. Yeah.
And you know what you were telling me, dude? So actually, I want you to hit on this once I'm done with the market, because I want this to be something really available to everybody, because I think a lot of people don't realize this. But to get back to what I was saying, though, like they completely denied their fault in the banking problems, right? But when you think about it, banks are not all that innocent here either. Okay, the Fed did cause problems. Banks have actual specific departments that manage risk and are supposed to be looking at their interest rate exposure. So they failed to do what they failed to do. But the Fed coming out and saying they had no say in this, it's kind of unbelievable. Now, basing on their recent comments, it seems like they're not done with the destruction. They are literally killing the economy right now. And they're not even realizing that actually inflation is doing what they wanted it to do. It is coming down, but they look at old data. So it's a 30-day old report. You and me, we live in the here and now. So when the Fed does something, you and me feel the immediate effect right away. We're like, dang, man, what happened? So the best way to describe the Fed's actions is something one of my mentors says. He says, it's like someone driving down the road and looking in the rearview mirror.
The whole time.
The whole time. And that's what they've done. And a quick cool thing that I wanted to kind of give people as a positive sign was that today's CPI report actually reported something good and something bad. So the good thing was overall inflation came down to 5% from a year-over-year period of 6%. And the overall inflation, if we all remember, was almost as high as 9%. So now from 9 to 5, it's almost cut in half, which is pretty
good.
favorable.
And that too in a matter of what, 3 months, 4 months?
Exactly. So it is working. Now, when we look at the core report, there's a core report that, takes out food and energy prices because the Fed cannot control those.
Right.
So they don't look at that. They look at only what their policies can control. And that core report actually came in a little higher by 0.1%. So it was 0.5, it went to 5.6. But again, this is because of lagging data. So, and I'm not going to get into the boring aspect of it, but all this is pointing towards what we talked about the last time. And I told you guys that as these numbers are, coming in better and better, next month, May 10th, we're going to get April's report. And we are extremely confident, in the finance community that the inflation levels are actually going to be a lot lower. And that's going to be a turning point for interest rates because they will follow inflation going down. And we're kind of identifying somewhere, summer, midsummer, maybe rates are going to be between the 5% range, mid-5, low-5 range. And it's only going to get better from there because inflation will come down towards the end of the year. So the cool thing is we're going to have much better pricing. People are going to feel much better. But the problem is, Mohit, that we don't have any inventory.
We don't have inventory.
So what happens, Mohit, when we have low interest rates and no inventory?
What happened in the last couple of years, man? You're going to have multiple offers on every home. You're going to have homes going 50, 60, 70, even $100,000 above asking price. And it's going to be that same cycle over again that we had in the last couple of years. That's just the way it is. If you have low inventory, low interest rates, you're going to have a ton of buyers and not enough sellers because these sellers are going to be like, you know what? I'm just going to hold off. Or they're going to sell and they're going to be off the market so quick you can't even look at it anymore.
We'll be back after a quick break.
Hi, I'm Mr. Marshall from Two Word Tunes, the child's podcast where your host, me, Mr. Marshall, will create catchy, fun songs based on your suggested 2 words sent in by our fun listeners and turn them into songs that will have you laughing, singing, and even dancing along. Let's get started. Tune into my podcast weekly for a new song.
Yeah, and this is already happening, man. Like, it's already in there. Like we said,
we're seeing it again. We're definitely seeing it again. We're seeing multiple offers again. We're seeing buyers that can afford to buy right now. They don't care about the interest rates, or if they do care, they know that they can refinance down the road. They'll just go ahead and get the house that they want now, and they'll have less competition. But now the competition's back. Now they have to bid against each other.
Yep. Yeah, and it's crazy because if you think about it, it's tough. It's already tough because there's not enough homes. So not only is there not enough choice to because buying a home is kind of a fun thing. It's you're supposed to go, you look at a couple of homes, you're like, it's you're like, man,
the
like
experience.
this, like that.
It's
It's an experience. Yeah. Exactly. It's the experience for buyer and seller. Like it's a really cool thing in your life. It's a huge deal, becoming a homeowner. But now this is kind of like, oh my God, man, like, do you want this or you don't want this? Okay, you're gonna have to give me 10 grand more. But the whole problem with that is if anybody is ready, and this is something that it's always funny to talk about. But when you talk to, the usual people that normally don't do a lot of research and like, when is a good time to buy? It's like, the good time to buy is right now.
Yesterday was a good time to buy.
but the thing is, that may be true, but it's not true for everybody. And, you have to organize your finances first and understand, is this a good financial decision for you? Because the last thing you want to do is become a homeowner and your mortgage broke. That is not a good way to live, So as all these things, you find out about, I would say, please look at your finances, speak to somebody in the industry who can guide you. If you have some family, friends, anybody who that have done this before, that's a really good way to kind of identify, okay, once you buy a home, you have other responsibilities too, and they're great. And that's what, Mohit, you were going to talk about a little, that the huge benefit of owning real estate is not just the cash flow aspect of it, right? There's a few other things that either you're buying as an investment or primary. These 4 things are like, you will not get them anywhere else.
Absolutely. I mean, like people forget, your home values just by the last, 20, 30 years, its values have gone up. So your equity of your home keeps going up. the value of your home keeps going up. I know some investors are like, you know what, I'm not making enough money on rent. Yeah, I understand that, but you're still making money through equity. Granted, you're not seeing it up front, but once you do sell, you're going to be like, okay, I get it now. If you divide it up and take it as rent, then yeah, I made cash over cash. I made a good 7, 8, 10%, depending on location and what you bought. But that's my thing when I talk to investors. Be like, don't worry about the rent amount. Yes, yeah, you want to be competitive. Great, that's fine. Be competitive, make a couple of bucks, but don't worry about that too much. The thing that you should be looking at is the investment itself, the house itself, the location itself, and see if it's worth investing into that. Because you as an investor, you don't care too much about the home, right? In the sense of, you do care about it, but in the sense of like, you're not going to treat it like you treat your primary home. You're gonna find the shortcuts to fix things and things like that. Some are great people. I mean, some investors are great. They will put the high dollar in there and keep that home in good condition and whatnot, because eventually you are going to resell that. You're not homes are not one of those things that like the stock market. You can buy it in the morning and sell it in the evening. You know what I mean? The transaction doesn't happen that quickly. But that's.
And it's I like that you brought that up, dude, because I think the comparison between buying stocks and buying property, most people argue that, man, yeah, stocks are, a faster investment turnaround. But here's the thing. It is, and it depends on what your goal is. Not every investment is the same, and real estate is not meant for people who are looking for short-term gains. Unless you're flipping, you're not going to get short-term gains. You will have to realize your gains. You will have to wait. And here's a cool example. So you buy stocks worth $10,000. You get stocks worth $10,000. Yeah, sure, you can leverage that up to a certain degree, but whatever the value is fluctuating to up or down, you are prone to market risk. And with the current volatility, unless you're a seasoned investor, it's going to be very hard for you to time the market and exit, apart from the market manipulation too. But in any case, even if you made a steady 10% return at the end of a year and you withdrew that, now you're going to pay capital gains tax on that. Now, let's go to real estate like Mohit is talking about. So if I made $100 of positive cash flow, but that's one part of it. I bought this $400,000 house and I now purchased it, I'm financing it, and I'm renting it out. I bought a $400,000 property with, let's say, 20% down, that's $80,000. So for $80,000, I'm controlling a $400,000 asset. It's important to remember this because now, even if I'm making $100 a month in cash flow, the appreciation is based on the purchase price of the property, not my money that I put into it. So it's going to appreciate by 5% for $400,000. That's $20,000 at the end of the year. And the cool thing is it's built in equity. Now, the next cool part is because somebody else is paying your mortgage, that balance is actually dropping. So you're getting your cash flow, $100, right? Not much, but that's getting paid down. So let's say somebody paid down $1,000, $2,000 in principal, just to be very conservative. And it dropped from, 320 to 318 in terms of principal. But your property purchase, the appreciation went up by 20 grand. So that's the equity you have. So that's basically money you made on top of your $100. Here's another cool part. You can actually save so much money on taxes, and you can depreciate the property. You can do so much. And I would say talk to a tax professional for this. I don't want to cross the line here. Got to stay in my lane.
Two things we don't talk about is taxes and law.
Yep. Yep. We stay back in our lane.
We're not attorneys here. We're not tax experts here. But we always say, consult with someone who is a professional in that. And if you are investing and you are investing high dollars, even if you're investing moderately, still talk to someone who can, guide you correctly. just like yeah, we can guide you on the loan side of things and how you can manage it. And me and we'll do the research. We'll do the back end research for you and let you know. Okay, this is a good idea.
You know what, Mohit? I got a question for the audience. You made me think of this. Do you think so? All our amazing listeners, guys, thank you so much again for your support. We really love you all here. And I think this is a cool thought. So I'm thinking if you guys would like us to do a live webinar and go through the basics of real estate investing, how things work, from financing to the real estate side of it, and, kind of break it down, go over it, and then have a, Q&A session at the end or something like that. If you want us at the Moving to Florida show to do this for you, me, Jetson, Mohit, we would love to do it. Please give us some feedback. So, that way we can work on this for you. And I'm sure we've never done this, right?
No, we've not done a live episode.
Yeah.
We can do a live episode.
So
there we go.
That's what I'm saying. And we can get on here and we can actually build a presentation for investors, first-time investors. And then we can do some question and answers, guys. So please send us what you guys think, whatever, just anything you have in mind, whatever topics you guys, think, and we're just going to try to make this into something. Jetson is going to be like, man, I put this guy as a co-host for one day. And he did something totally off.
But you're absolutely right. And it's a good segue because I'm going to give you guys how you can contact us now. We want to hear from
there you. Go.
You can reach us on our Moving to Florida show hotline by dropping a voicemail or texting us at 407-900-5859 or drop us a DM on Facebook or Instagram at Moving to Florida Show. And for Twitter, our handle is at Moving to FL Show. If you'd like to connect with us, if you have any questions, or if you need a realtor in Florida or a lender in Florida, you can reach us at movingtofloridashow@gmail.com. Be sure to subscribe to the show if you like our content so that it would automatically download to your device and get you one step closer to moving to Florida.